Welcome back to the ETF Inspector. It is Sunday, July 20th, 8:30 in the morning, but I don't think this is going to come out till afternoon. But this is the video for the week look ahead and payment distribution guesstimate for two YieldMax funds, ULTY, everybody's favorite, the Ultra Option Income Strategy Fund, and LFGY, the Crypto Industry and Tech Portfolio Option Income ETF. As always, just a reminder, I'm on X at ETF_Inspector1. I give you a heads up when the videos are premiering, just in case you want to check out the live chat and talk with other people about the video. Before I get started, this is kind of like the new tradition. I just want to shout out and thank people. So we had, where is it? I don't know how to say that, Mastery. At one point they changed their name to Always Learner, but it looks like maybe they changed it back for the super thanks. Much appreciated, not expected, so that's why I want to make a big deal. Thank you very much. Before we get into this, if you're kind of new here, you may want to check out this video right here. Start here, all you need to know about ETF Inspector videos. I will put a little link right up in here. It'll be just like an eye with a circle. If you click on it, it'll take you to that video. It'll explain a lot of questions that you're going to come up with as you look at our charts. That way you don't have to keep asking the same questions everybody else did. So we go down, we download the holdings from YieldMax's website, and it just looks like this. All right, and so that's really hard for you guys to focus on. There's a lot of information repetitive that we don't necessarily need. So I take that and I turn it into our charts here. Unfortunately, there's just too much information to get all on one screen, so we're going to scroll back and forth a little bit. But this video is going to be fairly long. This is the in-depth, right? We're taking our time. It's the weekend. We're going to look at each stock within the fund, on each fund, see how the IV, that's implied volatility, has changed, and that's important to us because that goes into our payment estimates. And we're not going to go through any trades because we've done them in the weekday videos, but we're going to take a whole look at it to make our guesstimate. All right, I didn't mean to shrink that down. Well, let's get started. Everybody likes the guesstimate portion the most, so we'll start with that, and then we'll go back and look at how we are set up to see if we can win our trades throughout the week. So big picture. For this past week, there were 493 trades that we went through line by line all week long. The 14th, there's the 15th. Obviously, I'm scrolling too fast for you to read, but you've seen these in previous videos. Just kind of giving you an idea for how much we go through in a week. 17th, and then, of course, that was a big day. And then the 18th is rolling day, so anything that did not get closed out is going to get closed out and rolled on the 18th because we don't let anything get assigned. I should have blacked out this next portion. You're gonna get to see the answers to the test before I get there. All right, so the week total, right, trading wise, profits and losses, you can call them debits and credits, right? We were negative on the first day, 6.1 million, positive on the second, 334,000, another 6.4 million to the bad on Wednesday, 7.6 negative on Thursday, and a negative 700 on Friday. So trading wise on the week, we spent 20 million more than we brought in. Now, before you get too scared, if you've been around for a while, you already know you're not worried about that because you know what caused it. But if you're new, don't worry. All right. The reason we lost on the trades is because the value of our funds skyrocketed. So on Monday, to go with that $6 million trading loss, our value increased by almost 31 million. Tuesday, it was down about 980,000. Wednesday, biggest day yet for the ULTY fund, increase of 45 million. Thursday, an increase of another 25 million, and then Friday, an increase of another 11.6 million. Enormous week. The value of the fund jumped by $112 million. So we lost $20 million trading. We increased our value by $112 million. So one is realized, the other is not, but it's still going to have a huge impact. So then we take these numbers and we come up with estimates for what they're going to pay out. Obviously, if they lost money trading, the plan A is collect enough money trading profit-wise and then distribute it amongst the shares. If they can do that, perfect, nothing to worry about. But in this case, since it's a loss, they would have to collect almost 8 cents from each of us to make that money back. So that's not what they're doing. The backup plan is they try to pay the IV of the underlying. So that's why I said we're going to talk about the IV. And so this is why it's kind of like which one do I put first, the chicken or the egg? Because I'd like to show you how we got to this IV, but this is the part you guys are so interested in. So when it comes to paying the IV, you take the closing price on Friday, which helped us a lot. It was up overall. This is the highest closing price we've had since I've been covering the fund on a Friday, 641. We multiply it by the weighted average of all of the IVs, and that came out to 81.86%. That's an increase from last week. And then since it's weekly, we got to divide that by 52 weeks in the year. That comes out to a just over 10 cent distribution. So we just got 10 this past week. We were real happy with it. But here's the thing, and this is why this part's just my guess, right? Maybe it's probably going to be real close to 10. We got 10 last week. Let me see if I can show you real quick. I like to hide things so we don't have so much to look at. Last week, they paid us 10 when we lost money trading and only made a small profit. Increase in value, right? It was estimated to be 9.6 cents. I guess 9.5. They paid us over 10. Now, we just had an absolutely enormous week, increase in value of over $100 million, and the stock price went way up. So even if they pay us 11 cents, let's say the stock stayed right here all week, and then they declared 11 cents. Thursday, it would open up at 6:30. That's still great compared to where it's been in the past months. So I think because of the huge increase in value and the great increase in the share price, I'm guessing 11. Now, if it's 10, definitely not surprised at all. But there you go, and I bet you guys will be real excited about that. And so we will see. All right, so that's it on this trading page because we talk about the trades throughout the week. Let's hide these back up so it's nice and easy to look at. So my guess is 11 cents. Taking a chance there. Maybe I should have said 10.5, but we will see. So now let's see how we got there. So each of these, some people have asked me to talk about these more often, but here's the thing. They're going to change every single day, and this is very time consuming. So I do not update these on a daily basis. I update them to get the most current IV right before we make the estimate because they have already told us that this is the time frame where they make their decision. So Applied Optoelectronics, that's AAOI, they're about 3.9% of our holdings within this fund. I should say it's fairly evenly allocated over here in ULTY. You'll see kind of a range of 3 to 6. Some may get a little out of balance, but usually they'll either buy more or sell some to even that out. When we get to LFGY, there's no kind of balance over there. So they were actually down, but it's okay. We can take it down to 126%. That's enormous IV. That is absolutely helping our average. We'll go through all the IVs and then we'll back up and talk about the options. AppLovin had an increase this week to 85.9% IV, and they are 4.7% of our holdings within the fund. The way we figure that out is it is just the value of all of the shares in that stock divided by the value of all of the shares of stocks combined, not taking into account the options. AST Space Mobile was another increase to 96.1%, and they are 6+% of our holdings. So this is an example of, I wouldn't be surprised if we see a little bit of balancing soon where they just sell a little bit just to disperse it among the others and get them kind of back in balance. But either way, that's great to have a nearly 100%er multiplied by 6+% of our stocks. Coinbase, 4.7% of our holdings increased to 67.8. First Solar, almost 4%, increased to 58.4%. Robinhood was an increase 2 to 74.1%. They're over 6% of our holdings as well. We've got 90 million just in them. IonQ, and even 5%, they had an increase to 93.3%. So all this volatility lately is helping our fund. Mara was down, surprisingly, 4.6% of our holding. They were down to 73.6% IV. MicroStrategy, everybody over there in the Misty Mafia is happy to see an increase, up over 53%. They were under 50 for a little while. They're almost 6% of our holdings. Nebius Group, 4.38%. That was a decrease to 80.1%. ServiceNow, this is a brand new one for us, so we don't have a ton of money in them, 2.69%. We just kind of added them last week, I think on Thursday or Friday, maybe Friday. So we don't have what their IV was the previous week, so I don't know if this was an increase or a decrease, but 42.8. So it's pretty low one for them to be adding to the fund. You'll see not a lot that low. Oklo, 5.8%. They have 100% IV. That's an increase. They've been on a tear lately. Palantir, up over 5% of our holdings. They were a decrease to 65.1%. As Palantir becomes bigger and bigger, more of a household name, their stock is going to kind of balance out, similar to what MicroStrategy did. Reddit, 5.6% of our holdings. It was a decrease to 82.8% IV. Rigetti, another even 5%er, increased to 107.9%. SMCI was a decrease to 72% with 4.4% holdings. SMR, that's New Scale Power, 5.15% of our holdings, 110% IV is an increase from last week. Tempest AI is 3.7%. That was a slight decrease to 76.1%. I should note that none of the decreases were enormous decreases, but some of the jumps were pretty big. Tesla, 2.69, so we've really shrunk our position. We used to have a lot, but they have decreased to 53.6%. I think the guys maybe are just a little leery of the fact that Elon keeps getting in arguments with the president, and it doesn't help the stock. It usually bounces right back, though. That's why if you watch my other videos, I jump in every time it dips. Upstart Holdings, 5.65% of our holdings. It's a decrease, but that's okay. It's still over 100%, so that's helping a lot. And finally, Vistra Corp, 4.3% of our holdings was an increase to 60%. So that totals out 100%. What we do is we multiply each of those percentages of holdings by the percentage IV, and when we total them up, that gives us a weighted average of IV for the entire fund of 81.86, and as you can see, that's an increase from last week. All right, since we're here, right, assets under management over here in ULTY is up over 1.6 billion. On Friday, 6.5 million more shares were sold, bringing us up to 258 million outstanding shares, and the NAV and closing price were within 2 cents of each other. Okay, we don't have any concerns about change in market values. We did that on Friday. This is just looking ahead to this upcoming week to see how our options look going into the week, see if we're going to win them, have to pay to close them out, or what. So AAOI is the first one. We've got calls sold at $30 and $30.50, a whole lot more at the second one. They're 4.7 and 6.5% out of the money. Next, we don't own any shares in AMD, so that's why there's no solid gray line across here. But what we do have is a debit call spread. So they bought 150s, and then they sold 160s and 165s, all calls. So we want these 150s in the money. That's how a debit call spread makes money. So I don't color that red like I normally do for in the money because that indicates bad. generally red in the money on a sold call means we're going to have to pay to close it out instead of getting to keep the premium we collected. But in this case, on a debit call spread, we want it in the money because we bought that 150, and the higher it goes in the money, the more value it has. So they're 4.45% in the money. I'm going to say everything is expiring this coming Friday unless I point it out otherwise, okay? Just so we don't have to repeat it every time. App Lovin', they've got 3 strikes sold, 375, 380, and 385. They are 2.8, 4.2, and 5.6% out of the money. I should note that ULTY does a collar strategy 90% of the time. That means own the shares, sell a call out of the money, buy a put out of the money. And buying that put out of the money is the protection or the insurance in case the stock drops, to keep the value of our fund from tanking with it, because the value of the puts protecting those shares will increase to offset it. All right, AST Space Mobile, we've got 1 strike selected, $61, almost 15,000 contracts there, and they are 5.2% out of the money. Coinbase, we have a handful here. For Friday, 440 and 450, they're 4.8 and 7.2% out of the money. And then we have another 440 that is for August 1st, the following week, that's again 4.8% out of the money. We've got $88 million just sitting in government funds. Consider that similar to cash, similar to treasuries, right? It's just kind of like collateral, money on hand. First Solar, we're starting in the money on these 175s. We've got 600 contracts there. They're 0.5% in the money. We've also selected 177.50 and 182.50, with that being the largest position. They're almost 1% and 3.7% out of the money. Robinhood, we've got 2 selected. First for this week is 114. They're 3.8% out of the money with the stock at 109. And we've got 113 selected for the following week. That's just about 3% out of the money. IonQ, 2 strikes, 47 and 47.50. We could probably stand to lose the 47 so long as we win the 47.50s. As you can see, it's more than 10 times more. But they are 1 and 2% out of the money. And if you're familiar with IonQ, if it runs through your strike, it doesn't usually run by 50 cents. It runs by a couple dollars. So, but it's been up a lot. I actually sold a credit call spread over the top of them because I think they've run a lot, and maybe they'll give some back a little. Holding 21's the strike for this week, 7.6% out of the money with the stock at 19.50. MicroStrategy, been up a lot lately, but so is Bitcoin, obviously. 440 and 445 are the strikes selected for this week, 3.9 and 5.1% out of the money. Nebius Group closed around 52.80. They've got 55s and 56s sold, roughly evenly split, 4.1 and 6% out of the money. ServiceNow is a brand new one, not really familiar with how it trades or anything like that, but they've got $1,000 as the sold strike price, 400 contracts there, 3.8% out of the money with the closing at $963. Oklo, this one could get ugly. We're starting with the 67s, almost 3% in the money for the week, so we'll see how that one goes. Now, there are other benefits that can happen, right? So when we sold that, not only did it have intrinsic value, right, $1.98 currently, but we also got time value for it. So let's say it never even drops back down out of the money, but we close it out at the end of the week and pay the difference. We still got to keep the time value. So you can still win even when you sell in the money. They've also got 72s and 73s. Almost as many 72s as 67s, a smaller chunk of 73s. They're 4.3 and 5.8% out of the money. Palantir, a little tight here, 155s, 157.50s, and 160s, all for this week. You can see the contract amounts. just about 1%, around 2.5%, and 4.2% out of the money. So I don't talk about the puts, but as you can see, the strike price next to them, that's kind of like our, every time the stock goes up higher, they'll generally move the put higher too with it. So we kind of lock in our higher prices as stocks run up. So although they make us lose trades, they increase our kind of like locked in protected value. Reddit. Oh, messed up my coloring there. Did you catch it before I did? So those are in the money. 2%, that's another one. 145s are 2% in the money. They've got 150s that are 1.1% out of the money. And then they've got 155s for the following Friday. There's the large chunk, 4,500 contracts. They're 4.5% out of the money. So you can just see the difference, right? It would cost $361,000 to close the 145s out, $179,000 to close the 150s out, and over $4 million to close these out. So as the time ticks away, that number decreases, and we're getting to keep the difference. So if it goes all the way down to worthless, that's when you've seen where we close out for 1 cent, 2 cents, where we sold things for $9. That's an awesome win. All right, Rigetti, we're starting with these all in the money, 20,000 and 21 plus thousand contracts at $16.50 and $17, 3.8 and 9.93% in the money, expiring this coming Friday. So again, sometimes I say, I don't know what they're doing here, but they might have rolled these. The stock might have continued to go up after they rolled these. But in the end, even if they don't come down to out of the money, the time value is going to decay away, and we're still going to be able to keep that. And that's what they say they're looking for. They're trying to extract the time value out of these options. SMCI starting in the green, 55 and 56 are the strikes sold, 6.2 and 8.1% out of the money. New Scale Power closing around 50 and a quarter. We got 51s and 52s sold for this week. Whole lot more at 52. They're 1.5 and 3.5% out of the money. We're just about done with ULTY here. We can see the bottom. Tempest AI, just under 61. They've got 64 selected for their strike, almost 5% out of the money. Tesla, we have 345 and 347.50 for this week. It's at 329.65. They're 4.6 and 5.4% out of the money. Upstart, 4.6% out of the money on those 82s. Everything's in one spot. And then we switch over to Vertiv Holdings. We don't own any shares, so we have another debit call spread. We have purchased, so we'll look at the two combinations, right? So we purchased 123s and sold 134s to go along with them. So we want that stock to run up, right? These 123s are currently 4.7% in the money. It can just keep on going. We'll close that out at the end and get to collect that money. And then we also purchased 125s. And the reason I'm saying these go together, as you can see, 123s, we purchased 3,910 contracts. 134, we sold 3,900 contracts. So not only do you collect money up front on those the further out sold contracts. And so then if your stock doesn't get to that price, they become worthless. Well, when you buy to close them out, that's cheap, and you got to keep the difference. Plus, if this stock runs up high over that 123, you get to sell these at the end and collect all that money. So that's what we're trying to do. So they got 125s and 137s. The 125s are 3% in the money. And finally, Vistra Corp, starting in the money, 0.25% with 192.50 and the stock at 193. All right. So that is everything for ULTY. If you're just an ULTY person, thanks for watching. And maybe you want to see how LFGY looks to see if you want to get into them, or if you're getting off, maybe just fast forward to the end so you get to hear the dad joke of the day. But either way, thank you. Let's switch over to LFGY. All right, we'll start with trades and the estimate because that's what you like the most. We had 331 trades over here in LFGY throughout the week. So we start on the 14th, Monday, Then we get to Tuesday, Wednesday, Thursday, and then anything that wasn't rolled yet on Thursday's got to go on Friday. So we processed 331 trades. And we take a look at how we did trading wise. On Monday, it was a decrease of 800,000. Tuesday, a decrease of 58,000. Wednesday, a decrease of another almost 800,000. Thursday, we were 214,000 to the good, and then Friday, a negative 1.7 million. That totals 3.2 million in losses, trading wise, realized losses. But our share values overall increased for the week. So it was up 3.6 million on Monday, is down on Tuesday 2.8 million, up almost 5.9 million on Wednesday. Thursday was 2.1 million to the good, and then Friday was a negative 1.2 million. Overall, that came out to a $7.6 million increase. Now, I do want to point out, right, those numbers don't seem as surprising as ULTY, but ULTY is a $1.6 billion fund, whereas LFGY is a $182 million fund, almost 10 times different. Okay, so to make 7 million is not a bad day. That'd be like making 70 million over on ULTY, not making, but increasing in value. So our estimate, obviously, we can't pay out negative $3.2 million to everybody, so that one's really useless. The backup plan, and this isn't just me, this is what YieldMax tells us. They try to pay the yield to match the IV of the underlyings. So that would come to 51.79 cents. That's our 65.52% times our closing price of 41.10. I would say, though, following previous weeks, I don't need to unhide them again to tell you, right? So I looked at previous weeks, right, where we lost a decent amount there compared to share value increases, kind of the proportions between them, looked at what they paid last time. So last week was similar. It would, and they paid a little less than the IV estimate, probably because they're losing money. But I think we're going to get a 50-cent payment. So tell me what you think, right? I think we just get 47 or 48 or something like that last week. But they did things. They made moves to increase, or not made moves, but the IVs increased on the funds that we hold, and the stock prices, or the share price, is doing well. It's up. So I think they're going to reward us with a 50-cent distribution. But the only thing we can do is wait and find out on Wednesday. All right, when we look, this will go a little quicker because there's a lot less funds or stocks, maybe half. So BitDeer is about 3% of our holdings. They increased to 105% IV. CleanSpark's 4.67%. They decreased their IV to 80.4. There's a formula that goes to these, right? So I'm not just these aren't things they select or choose. This is kind of based off of how much their stock price has been fluctuating, how severe ups and downs they move. Coinbase, this is a huge percentage of our fund, so we like to see that increase. That went up to 67.8%. Core Scientific's about 5%. They increased to 75.2%. Circle Internet Group, 3.4% of the holdings, and increased to 103.1% IV. Galaxy Digital, we like the 111.4%. That was an increase, but they're a very small portion. I mean, so just to compare, right, Galaxy, we've got $3.3 million in their stock. Coinbase, we've got $30 million in their stock. GameStop, they decreased to 45.4%. They're 2.7% of our holdings. Robinhood's another big one, 7.26%. So we'd like to see that increase, 74.1% IV. Hut 8 Corp, I don't know what they do. 5.1% of our holdings decreased to 81.2%. IBIT, that's iShares Bitcoin Trust ETF, 8.8% of our holdings, they increased to 39.4. Another thing I'll point out, ULTY is really, they try to pick the high IV stocks that they feel comfortable trading with. So the whole goal is throwing a bunch of high IV stocks. LFGY, I know it says crypto and tech, but everything in here is crypto or crypto related. So you're going to have some low ones, you're going to have some high ones. They're not just looking to get the high ones, they're trying to put a whole portfolio of crypto stocks and funds within the fund. Mara Holdings, 8.1% of our holdings, they decreased to 73.6% IV. Mercado Libre is 3.5% of our holdings. It was an increase to 44.5. They've kind of run back and forth from like 2,300 to 2,600 per share. MicroStrategy, another one, right? Big, over 10% of our holdings. So we like to see increases. They bring up our weighted average up to 53.1. NU Holdings, 3.3% holdings, 49.2% IV. NVIDIA decreased. They're really getting low, 32.7% IV. They're only 2.7% of our holdings. Opera, 3.3% of our holdings, decreased to 45.1% IV. PayPal, 2.4% of our holdings, decreased to 42.2% IV. Riot Platforms, 5.4% of our holdings, increased to 78.7%. And finally, Block, 2.2% of our holdings, decreased to 57.5%. All right, so as you can see, we'll get through them a little quicker. Let me take another drink so I don't start getting a weird voice on you. All right, BitDeer, going into the week, they have 14, 50, and 15 selected as their sold calls. So if we sold the call, there's a negative. We have negative contracts, right? So let's say you just buy shares and then you sell calls. Well, you didn't have a call, so you just sold it. Now you have negative. That's why you got to buy it back at the end. So that's why it holds a negative value kind of placekeeper, because you're going to have to pay to close these out. So the whole goal is for these to continue to decay and dwindle down to nothing, so you pay a much smaller amount. Now, LFGY does not do a covered call, or does not do a collar strategy. So they buy the shares, they don't buy puts to protect them. So you don't have the downside protection here. So that's a key thing to think about. If you like the more risk, great. So sometimes they will just sell a call, and if it runs through it, then they're going to pay whatever it gets to close it. Other times they'll sell a call and then buy another call, considered a credit call spread, and that limits how much they could have to pay as the stock runs up if it goes past their sold call. Because if you sell something you didn't have, you got to buy it back to close it. Now, those of you who do options trading yourself, but you're not too familiar with these funds, you're thinking, hey, I could just let the shares get assigned. I don't have to pay to close these out. They don't let anything go to assignment, so they're going to pay to close them out. Okay, CleanSpark, $12.78 was the closing price. They've got $13.50 selected as their strike. It's 5.6%. I don't think I remember to tell you. BitDeer, 5.8 and 9.5 almost percent out of the money. Coinbase, this is our biggest holding. Right, we selected 50 contracts at 425 and 679 contracts at 450. So we really got to win the 450 for sure. More than 10 times the amount. 1.2 and 7.2% out of the money on those sold calls. And just to explain on that, what I was explaining, just to go further into what I'm explaining to you, it'll be easier. We'll say on Core Scientific. No, it won't. On Circle Internet Group, right? So if you sold the 252.90 and then you bought the 290, you limited, which is a big spread there, your loss to $37.50 per share. Like on this one, they limited, I guess I could have done Cores, 1450, they sold 6,500 contracts, and then 16 they bought. So there's only a $1.50 difference in between those for closing them out. Okay, but Core Scientific selected 14 and 1450. This one's the one that matters, 1450, 8.6% out of the money. The smaller positions, 4.8% out of the money. Circle Internet Group, 12.8% out of the money on their single strike chosen 252.50. That always sounds funny when I say that. $252.50. Galaxy Digital. This is an odd one. Thankfully, it's just a small position. 25/50s are 6% in the money. The 30s are 10.5% out of the money. GameStop, they chose $24 with the stock at $23.28. Those are 3% out of the money. Robinhood's at 109 and change. They selected August 1st. So these are not expiring this week. They expire the week after. 117s and 120s. They're 6.6 and 9.3% out of the money. HUD 8 Corp, 23 and 23.50. Obviously, the 23 is the one that matters. 10 times as many contracts. 6.3 and 8.7% out of the money. IBIT, they do not trade options on them, so we just want this one. Go up, go to the moon. We don't care. There's no options to close out associated with that. Mara Holdings, they've got 21 selected as their strike price, so it's just these two. They're 7.6% out of the money with the stock at $19.50. Then we go to MBTX. They do not own shares, so they only trade options on them. And they've got two different strategies here. This first one is an August 15th credit call spread. They sold the 295 and bought the 320. So that 295, 6.2% out of the money with the stock closing at 277. But they also have a debit put spread where they out till December 31st where they bought the 230 and sold the 150. So the 230's got to go in the money to win this trade or approach the money very quickly to win this trade. But there's a lot of time on that one. Mercado Libre, out till the end of next week, this coming week, 2.3% out of the money with their 24.70s. MicroStrategy, we've got three different strike prices selected. The third one's pretty inconsequential. 450, 462.50, and 475. They are 6.3, 9.2, and 12.2% out of the money. So it seems like they're expecting a pretty high, big up week for MicroStrategy, or they're tired of their strikes getting blown through. NU Holdings selected 14 with the stock right at 13. They're 7.5% out of the money. NVIDIA closed at 172.40. We've got 175s sold for this coming Friday, 1.5% out of the money, kind of tight. Opera, almost 11.8% out of the money on those $20 strikes, but they are not expiring this week or next week, but the week after that. PayPal has 73 selected for their strike. It's already 1.5% in the money. So you just have to keep in mind when you think about these, why would you start the week that far in the money? They might not have rolled on Friday, right? They might have rolled on Thursday and then the stock continued to go up, or Wednesday, or they might have rolled early Friday and then the stock went up after that. So don't think that they, just started the week selling the next strike already in the money. That's not necessarily the case. Riot Platforms, 1% and 4.6% out of the money on these 14s and 1450s. As you can see, there's a whole lot more at 1450. So we can win the 1450, lose the 14, and still have a profitable week there. And then Block XYZ. What'd they do? So they just have 7 contracts, 7 calls sold. They're 1.6% out of the money at 74. And then they've got a put spread, and it is a credit put spread. They sold the 73 and bought the 71. So really they need the stock above 73 on that one, and it's at 72.82 or 0.25% in the money. All right, so that is everything. Like we said, 182 million managed in the fund, 4.5 million outstanding shares. There was no change on Friday. This is odd. We don't generally see this. Pretty large difference between the share price and the NAV. So generally, the only time that happens is when things haven't updated yet, and either let's say people had sold out of the fund, then that would take this $4.5 million into a smaller number. So if you divided 182 million by a smaller number, you'd have a greater answer. But this is the weekend, so everything is up to date. So the fund was trading pretty high above the NAV, pretty high above what it's worth. What does that mean? Unless these shares within it have a nice up day on Monday, I wouldn't be surprised if we see LFGY dropping even without having a bad day, just because people know they were paying more than what the fund is worth. This is basically what, if you total up all the value of everything and divide it by the shares. So it's not like a normal company where your company's also worth, you've got assets and you've got, projected income and sales and all this and that. This is literally, here's all our money divided by the shares, that's what it's worth. So I wouldn't be surprised if you see people taking a profit on that, 69 cent difference. But all right, so just a quick recap. We think that the payment is going to be around 11 cents, between 10 and 11 cents over on ULTY. And we think it's going to be around 50 cents over here on LFGY. We'll all find out on Wednesday. And if you follow me on X, I repost everything from YieldMax, well, everything pertinent to what I talk about. So where is it? Right, so I will repost that, or you could just follow them. But all right, that's it. So dad joke of the day. As always, before I do, thank you everybody, especially if you stuck through this long one. I know it's a long one. We go way more in depth, but it's the weekend. We've got more time, and we want all the information we can before we start trading the next week. So if you haven't already, please subscribe. We're up to 1,800 subscribers. I don't know. Come say hi in the live chats. Those are always fun. And please share these if you know people that are into ULTY and LFGY, but they're not watching. Get some more eyes on these videos so we got more understanding of what our money's invested in. So, all right, thank you. Here's the dad joke. How do you measure the mass of an influencer's following? By Instagrams. It's kind of a nerdy joke. Mass grams. Okay. Have a good rest of your weekend. Finish cutting the grass, all that good stuff, and good luck trading on Monday. Catch you in the next video.